Good morning, my name is Jordan Lambert, Market Analyst at Gelatama Management. Gold's slide has continued, making a low at 13.38 this morning, closing in on April's low at 13.21. The fall is mainly attributed to the Fed's talk about reducing stimulus, weakening Japanese yen, and growth concerns in Europe and China. US consumer sentiment released on Friday night gave another boost to equities and applied further pressure to gold, extending this bearish trend line. Gold could receive a respite from this hammering after comments from Japan's economy minister highlighting the potential negative impacts of a weakening yen on the Japanese people, which brought some sellers into the dollar-yen pair. Now let's take a look on the charts. This is a 15-minute chart. As we can see, after today's bear attack that reached a low at 13.38, price has been consolidating, and this can be illustrated by drawing a triangle like this. So as we can see, since the low here, we've got a series of lower highs here, but also a series of high lows. So this just illustrates how there's quite a lot of indecision in the market so far today. Market participants are sitting on the fence as to rather than guessing which way the market's going to move next. So if we get a breakout on the upper side of this triangle or a breakout down the bottom side of this triangle, that could dictate today's trend. So therefore watch for a breakout either side here. Let's take a look at the 4-hour chart. Here we have a very strong bearish trend line since support was broken last Wednesday at around this area last Wednesday, and we can draw quite an established bearish trend line with this diagonal line here. There will be opportunities to short the market or go long as price draws near this trend line. There could be shorting possibilities when it approaches the trend line, because as we can see, it does seem to be quite an established trend line. Or bulls would be waiting to see if there is a deceleration in this bearish trend if price breaks through this trend line and we see a bit of sideways movement. So do bear in mind there are opportunities as price approaches this trend line. And as price approaches this trend line, for shorters, there will be a lower risk opportunity rather than shorting the market now, because you would simply just place your stop on the other side of the trend line. There is a substantial amount of data due for release this week, including Federal Reserve Chairman Ben Bernanke testifying in front of Congress at 10 p.m. on Wednesday, and also there is a Services and Manufacturing Purchasing Managers Index data out from Europe Thursday afternoon. Therefore, do reduce exposure around these times and trade carefully. That is today's analysis. Thank you for joining me, and I will speak to you tomorrow.